Hey, what's going on? Keith from Trigger Happy, and pardon the mess behind me, but in a bit of an office move at the moment. So I'm going to do a video a little different than what I normally do and talk about auto insurance. And before you click off, yes, I know it's a topic no one really is thrilled about talking about, but there's some things here that might help you out. So I've been in the insurance business for about 21 years. I've seen the ups, I've seen the downs of the insurance industry, and right now we're in a very interesting time. So I read an article today that State Farm over the 2022 year posted a $13.2 billion underwriting loss, which basically when it comes to underwriting losses, insurance companies have a lot of ways to make money, but think of it as dollars in versus dollars out. And it's a very simplistic way to put it. But if you're bringing in $1 and you're paying out $1.20, it's not a very sustainable business model. Eventually you're going to either have to raise prices or you got a business. So, and State Farm being one, obviously we know what they're going to do. They're like every other insurance company out there. It's not unique that they are seeing large losses. All companies are seeing that. Why is this happening, and how can you make changes to your insurance to help offset some of these rate changes? This is mostly driven by auto insurance. And if you'll look back about 3 years ago, you'll remember that when the pandemic started, every carrier out there was doing a refund, a rebate, a rate decrease because people weren't driving as much, and it made sense for the time. But now, 3 years later, everybody's back to their normal driving habits. The claims have returned. So we saw this dip in claims because people were staying home, but it's returned back to pre-pandemic levels. But now we have this little thing called inflation, and we also have things called part shortages, labor shortages. All these things are adding up. So, for example, pre-pandemic, if you wrecked your car, it would probably go in the shop. You might have a couple week wait. You'd have that car back in about 30 days or less, usually. Now those waits are up to 4, 5, 6 months sometimes because they can't get parts. There's 100 people ahead of you waiting to get their car finished, and there's only so many people to do the work. So you're finding we're paying storage fees, we're paying rental fees significantly longer than we used to. Not to mention cars are significantly more high tech. There's tech in the bumpers, there's tech in the grill, there's tech in the windshield. So if any of those are damaged, we have to fix that at a much higher cost than we used to. So when these claims prices are stacking up, insurance companies are left with one option, and that is to raise prices. And I have seen price increases that have been proposed all over the country, some as high as 50% in some states and with some companies. Now, I have not seen that locally here, but I do think in 2023, I don't think there's a company out there that's going to be immune to this. Everybody is going to take a rate increase. So what can you do as the consumer? Number one, large, nationwide, and you know, no pun intended, large companies tend to be much more susceptible to these ups and downs because they're dealing with, you know, fires in California, mudslides in California, they're dealing with snow in the Midwest, and they're dealing with hurricanes in the South. So going to a more regional company, an independent carrier, is usually worth your time. So companies I see around here like Grange, Erie, Westfield, Auto Owners, Cincinnati, these types of companies are regional carriers. They're sold by independent agents, and they're much more competitive than some of the larger companies. So that's number one. If you're with one of those big companies, it might be a good time to shop. Number two, what I find even in my agency all the time is people don't update me with their information. Kids move out, you get married, you get divorced, you buy a house. All these things that people fail to inform us about can add up to savings long term. So if your kid moved out of the house, you really don't need to be carrying them on their auto insurance. You know, if they're not a student, maybe they got married or whatever, you need to get them off your car insurance. That's one way you can look at saving money. Number two, people have super low deductibles. I see all the time. So people are carrying $0 deductibles for all kinds of coverages on their auto insurance. When rates are going up, it's a good time to revisit that. How can you change deductibles? How can you change coverages to kind of offset some of these rate increases? Maybe you're not, driving to work anymore. Maybe you've retired. All these things factor in. So it's a good idea to revisit those sorts of things. So this is what we're looking forward to in 2023 and beyond. So just be aware of that. If you have questions, I'll do my very best to answer. Obviously, I'm not licensed in every state. I don't know every state's laws, so please don't take me as an expert on everybody's car insurance, but I'll try my best to answer any questions you might have and point you in the right direction. So thanks for watching. Keith from Trigger Happy. We'll see you next time.